America is quietly rewriting the rules of money. Behind the surface of everyday markets, a silent transformation is already underway, one that most people haven't noticed yet, but that will soon affect every dollar in existence. It's not a law, it's not a reform, and it's not a crisis announcement. It's something far more subtle, more technical, and far more powerful. The United States is beginning what could become the largest currency reset in modern history, and it's happening right now underneath a mountain of debt so large that it can no longer be managed in any traditional way. We are talking about $37 trillion, a figure that is reshaping the architecture of the global financial system in real time. And the way this reset is being executed is unlike anything the world has seen before. And now we're about to see that light, so leave a like and let's start. For decades, the United States has held a position of extraordinary privilege. The dollar has been the cornerstone of global trade, the world's reserve currency, and the foundation of international finance. That dominance allowed Washington to borrow endlessly, to run deficits without consequence, and to finance wars, programs, and bailouts with money that other nations were eager to hold. But this advantage was never permanent. It worked as long as confidence in the dollar was absolute. And that confidence, for the first time in decades, is showing cracks that can no longer be ignored. The share of global reserves held in US dollars has fallen to its lowest level in more than 30 years. Major economies like China and Japan, once the largest buyers of American debt, have turned into sellers. Interest rates on US government bonds, which used to hover near zero, have climbed to around 4%, the highest sustained level in 2 decades. The cost of servicing that debt has exploded from roughly $500 billion to over $1 trillion in just 5 years. That means one-fifth of every tax dollar collected by the government now goes purely to interest payments, nothing else. Not defense, not infrastructure, not education, just interest. This is the stage economists call the debt doom loop, where the system begins feeding on itself. The more debt there is, the higher the interest payments. The higher the interest payments, the larger the deficit. The larger the deficit, the greater the need to borrow even more. And as this loop tightens, investors begin to lose trust. Confidence falls, yields rise further, and the spiral continues until something breaks. Every empire in history has faced this moment, and the United States is no exception. The question has never been if the system would reach its limits, but what it would do when it finally did. And that answer, today, comes in the form of a digital transformation. Because Washington believes it has found a way to delay the consequences of this debt explosion, not by cutting spending or raising taxes, but by redesigning how money itself circulates through the system. The new idea is simple on the surface, yet revolutionary underneath. Shift part of the existing dollar network into a digital structure tied to crypto markets, and use that transition to create new sources of demand for U.S. debt. This is the hidden foundation of what's now being called the $37 trillion currency reset. To understand why this is happening, you have to understand how the government borrows. Every dollar of debt is issued through treasury bonds, 10-year, 20-year, and 30-year notes that investors around the world buy in exchange for interest payments. Those interest rates are shaped by three things: inflation, short-term Federal Reserve policy, and a factor known as the risk premium, the invisible measure of trust that determines how much extra yield investors demand to hold U.S. debt. When that risk premium is low, borrowing is cheap. When it rises, borrowing becomes dangerous. In 2019, that risk premium was actually negative, around minus 1.5%. Investors trusted the United States so much that they were effectively paying the government for the privilege of lending it money. But if that premium merely returns to its historical average of 2%, the 10-year Treasury yield would jump from 4 to 6% almost overnight. That might sound small, but it would instantly add trillions of dollars to the cost of servicing the debt, destabilizing the budget, and likely forcing the economy into recession. So Washington's survival depends on one thing: maintaining trust. And when that trust begins to fade among foreign governments, it must be rebuilt somewhere else. That is why the United States is now turning toward the world of digital finance, using a new breed of asset called the stablecoin as a lifeline. Stablecoins are digital tokens that represent US dollars, and move freely across blockchains. But for every one of these digital dollars to exist, a real US dollar or treasury bond must be held in reserve. This means that when someone, anywhere in the world, buys a stablecoin, the company issuing it, such as Tether or Circle, must purchase actual US treasuries. More stablecoins mean more demand for American debt. And this quietly is how the reset begins. The market value of stablecoins has grown from around $100 billion to over $200 billion in less than 2 years. Analysts now believe that within a few years that figure could rise to $2 trillion. If that happens, stablecoin issuers would become the single largest holders of US treasuries on Earth, surpassing even China and Japan. It's a financial shift of historic proportions, a digital replacement for the traditional foreign demand that once sustained the American system. This is why the government has chosen to regulate, not eliminate, these assets. They understand that stablecoins are not a threat to the dollar. They are its next evolution. By embedding U.S. debt directly into the architecture of global digital money, Washington can extend the life of its financial dominance, at least temporarily. Every person in the world who transacts in a stablecoin, from a trader in Europe to a shopkeeper in Africa, is unknowingly helping sustain the American debt machine. The digital dollar becomes both a tool and a trap, a way to rebuild trust while masking the true weakness underneath. But make no mistake, this reset is not without limits. The total national debt now exceeds $37 trillion, and even if stablecoins grow to $2 trillion, that's still less than a fraction of the whole. The core problem remains. The U.S. continues to spend more than it earns, and the world's patience is not infinite. The crypto reset can buy time, but it cannot create real wealth. It can delay the reckoning, but it cannot cancel the debt. That's why investors are moving into assets that stand outside the system: gold, Bitcoin, hard commodities, the places where confidence migrates when trust in paper money begins to fade. Look closely at gold. It's been one of the strongest bull markets in decades, not because of industrial demand or jewelry, but because of fear, a fear that the world's reserve currency is being re-engineered to hide its own fragility. Bitcoin, too, has been moving in tandem with that fear, becoming the digital mirror of gold, the asset that rises when people sense the value of fiat money quietly decaying. These are the signals of a world in transition, the early tremors of a monetary earthquake that has already begun. What comes next is almost certain. As stablecoins become the new global infrastructure, central banks will step in with their own official digital currencies, known as CBDCs. At that point, the reset will be complete. Money will no longer just represent value, it will represent access. Every transaction will be traceable, every wallet identifiable, every rule enforceable. That is the true end game of this transformation. A world where the dollar survives, but only as a digital instrument under total control. So yes, the $37 trillion currency reset has already started. And while most people are distracted by prices and headlines, the very foundation of money is being rewritten. When the dust settles, it won't be the same dollar you've always known. It will be a digital version, built on the remains of an empire that refused to face its own debt. And by the time the world realizes it, the reset will already be complete. The only people that will be ready are the ones who subscribe to this channel, so hit that subscribe button and let me know your thoughts in the comments. See you soon.